Hello everyone, welcome to this week's weekly market view for Monday, the 29th of January to Friday, the 2nd of February 2024. My name is Vishal. Let's get started. All right, we're going to kickstart with the Nifty analysis. We're going to start off with the monthly chart. And as you can see, the monthly candle for this month is looking more like an indecision candle. It was looking a little bearish initially, but now it's more looking like an indecision candle. I think just tomorrow's day to go, and more or less this candle looks to close more like in an indecisive way. However, we still have this level of demand intact, which is from 19,852 to 18,859. Let's move on to the weekly chart. On the weekly chart, we are seeing a little bit of consolidation. Possibly we could say that this is still that weekly level of demand, not a great level, but still it is holding. And plus we have some area of supply here, which is probably going to be seen on slightly smaller time frames. On the weekly demand front, we have this rally-based rally level of demand, 19,867 to 19,679. So still all the levels of demand are very, very far away from current market price. If you look at the daily chart now, we are into this area here, but now this doesn't seem like it's going to hold. Probably it's going to try and push more towards the upside. So let's try to see what happens here. We have this level of supply, but again, this is a very, very strong consolidation. We have the budget coming as well, so we got to be a little careful about these levels. There is a possibility that the market could try and breach the all-time high and then probably take the next course of direction. And on the demand level, we have this level of supply which is intact. So I think unless and until the big news comes out, which is on the 1st of February, we might expect the market to consolidate between 21,963 to 22,130 as the supply. And on the demand front, we have 20,942 to 20,778. All right, let's now move on to the next index, which is the Bank Nifty. All right, so now we have the Bank Nifty index. Let's start off with the monthly chart first. So we have come into this level of monthly demand. Now there is a possibility that the markets can go a little bit more deeper as compared to the Nifty. The Bank Nifty has been a little bit more on the weaker side, but we have hit a crucial monthly level of demand, and this level was pointed out last week as well. And on the weekly front, we have hit a weekly level of demand as well. So this is your demand zone on the weekly chart. And right now, prices are just possibly trying to hold on to this level. Now, there could be another move to the downside, but barely the price has just touched. So there could be another move to the downside, and then we could again see a strong move to the upside. So this is going to be a key level of demand, 44,400 to 43,320. Any shorts around these levels should be completely avoided, as we are very, very closer to higher time frame level of demand. There is no clear supply yet, but yes, if the prices do start pushing towards the upside, then we might target these highs as potential targets because that's where the prices have reversed and reversed pretty strongly. If you move on to the daily chart on the Bank Nifty, we came into this level of demand. Again, this level was plotted. We did pause a little bit. Now we are facing a little bit of resistance from this level over here. So it'll be interesting to see what this level does, whether the market consolidates and starts moving to the upside. The next possible move, if in case the move is strong and to the upside, will be to try and fill this gap level. And as you are aware that we have the budget, anything is possible. So we just need to keep a close watch on these two levels, 47,850 to 48,383 supply, and 44,718 to 44,259 as your level of demand, right? So look at the weekly level of demand and then possibly try to line up any trade setups that you intend to take. Let's move on to the next index, which is the Nifty Financial Services, which is also known as the Finnifty. So let's load the chart of Finnifty. So let's do Nifty Financial Services. All right, so let's start off with the Nifty Financial Services. Very, very similar situation to that of the Bank Nifty. So let's start with the monthly chart. Let's remove all the tools here. Let's start the analysis nice, fresh and clean. So this is your level of demand here. And again, just like the Bank Nifty, the Finnifty has also hit a monthly level of demand. And usually what happens is when the prices hit these higher time frame levels, they don't just straight away give you a bounce, but they tend to give you a little bit of a consolidation, which also means that there could be an accumulation which is beginning from the institutions. As you can clearly see here, the price has not yet touched the 19,837 level. So it could be a little bit more of a bearish move to the downside before trying to give you a big bounce from here. But yes, this level looks pretty good. Let me just go ahead and connect the dots here. So 19,360 to 19,837 on the weekly chart of the Finnifty. Again, any shorts around this level should be more or less avoided as we are coming into a higher time frame level of demand. And taking into consideration the budget news, it's more important and it's more just to make yourself very, very clear, try to lean against the higher time frame charts as your 5, 10, 15-minute levels may not hold when such big news are going to be announced. Okay, so just lean and try to lean against the more of the larger time frames. On the daily chart, we have this drop based rally formation over here. So this is also going to be a key level. Prices have not yet come here, so could be another move to the downside because of this supply. And then maybe the markets might take off and then start moving towards this gap level over here. Okay. So there could be a little bit of still slight bearishness in the market before the market decide the next big move. So that's Nifty Financial Services for you. Now let's go on to the mid cap Nifty. So we'll go and load the mid cap Nifty chart here. So I have loaded the futures contract for mid cap Nifty, but their demand supply analysis more or less remains the same. Okay, so if you look at the mid cap Nifty is still pretty strong as compared to all the other indices. Mid cap is the strongest of all the indices with a monthly demand at 91.95 to 85.79. If we go on to the weekly chart, there is no close level of weekly demand. You do see these long wicks here, maybe indicating some kind of tiredness where market might rotate and start pushing to the downside. This drop-based rally now is going to be a key level of demand on the weekly chart. And on the daily chart, just above that, you have a little bit of consolidation. You also have this area here where markets have consolidated a bit and then just move strongly to the upside. So this is going to be a key level in case the markets do decide to turn and start moving towards the downside, 9558 to 9404 on the mid cap Nifty. All right, let's now move on to the USD INR. Let's try to see what the currency markets are suggesting. Are they giving us any clue before the budget? So let's look at the USD INR. All right, so the USD INR has again just been consolidating, not really the best market to trade, but because it's just consolidating could be a paradise for options traders who are trading, non-directional trades or sideways markets. But if you see over here on the monthly chart first, there's nothing much that is happening here. Markets are just consolidating and consolidating very heavily here without any direction yet. On the weekly chart, you do see a more of a wider consolidation. We had plotted this level as well, where we are seeing this bigger level of consolidation happening on the weekly charts. So markets seem to be a little bit more range bound on the USD INR. And also on the daily chart, as you can clearly see that within the weekly level, there is this 83.24, 83.35 supply level. So unless and until we see a range breakout, we are not going to be seeing bigger moves in the USD INR. So don't be surprised if markets tends to consolidate between these two levels even for the next week. Okay. All right. Let's now move on to the Nifty heavyweight. So let's first start with Reliance Industries and let us see what Reliance is telling us. So let's start off with Reliance. So Reliance, okay, let's wait for the charts to load. Okay, so Reliance Industries has made a new high on the monthly, and there seems to be a little bit of profit booking now coming onto Reliance. On the weekly chart, we still have all these levels yet pretty much intact, but definitely not a good time to go long on Reliance yet. We have these levels. We want to see a close or a convincing close about these levels, because you see this, the price went all the way down, taking all these orders and then pushing to the upside. So let's move on to the daily chart to see if we can see anything a little bit more clearer. And just around this level over here where we are seeing a little bit of a pause and then this strong move up. This is possibly the area where the markets can take a little bit of a breather and then start continuing its move to the upside. So any fall or any dip in Reliance will only possibly try and bring down the Nifty. So just be a little careful and keep on observing Reliance, just in case if you are trading the Nifty, then Reliance is a good benchmark to check the Nifty movement. Let's move on to the next heavyweight, which is HDFC Bank. So let's go to HDFC Bank. And let's try and see what HDFC Bank is also telling us. So after the earnings, HDFC Bank has been receiving the brunt here, but as you can clearly see, we are in this monthly level of demand. And as I told you earlier as well, that whenever the prices hit a very higher time frame or a bigger time frame level, they just tend to consolidate a little bit. So maybe before the big move comes now in HDFC, there might be a little bit of a consolidation. We are seeing these levels here. Market can or still has the ability to push to the downside towards these levels here. So keep a close watch on 1334 to 1270. If definitely this range breaks, then we are more or less likely to come into this area as well. So this level 1247, 1170 also looks a good level from where the prices have tried and to make a new high, and from there on they have just consolidated. So 1247, 1170 is a key level on the weekly chart of HDFC Bank, and 1334, 1270. So just keep a close watch on these two levels. And again, because HDFC Bank has strongly corrected to the downside, just be careful on shorts because we are coming closer to higher time frame levels. All right, so pretty much this is it from me for this week. I hope you all enjoyed the analysis, and like I always mention, if you do like our channel, hit the subscription button and become a part of the Sher Khan Education YouTube channel community. And do give your valuable comments in the comment section. We definitely look at your valuable comments and would definitely try to bring up more indices and more stocks in the upcoming session. Take care, everyone. Have a lovely week. Trade well, trade safe. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.